Hello everyone. Welcome to the Stock Minds web channel. Delcath Systems, NASDAQ DCTH, has emerged as a standout performer in the healthcare sector, demonstrating remarkable growth and promising value. With its innovative liver cancer treatment, Delcath, the company has achieved significant milestones as reflected in its Q1 2025 earnings. In this video, we will dive into Delcath Systems' recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Delcath Systems. Founded in 1988 and headquartered in New York, Delcath Systems is a specialty pharmaceutical and medical device company focusing on interventional oncology. The company's flagship product, Delcath, delivers high-dose chemotherapy directly to the liver, minimizing systemic exposure. This targeted approach addresses primary and metastatic liver cancers, including uveal melanoma and colorectal cancer. Delcath operates in both the US and Europe, with its ChemoSat system available in European markets. Delcath Systems financial performance. Delcath Systems' financial performance in Q1 2025 highlights its impressive growth trajectory and operational progress. The company reported revenue of $19.78 million for the quarter, marking a staggering 530.26% increase compared to $3.14 million in Q1 2024. Earnings per share, EPS, also saw a notable turnaround, improving to 3 cents from a loss of -45 cents in the same period last year. On a trailing 12 months TTM basis, revenue surged to $53.85 million, up 1,068.87% from $4.61 million a year earlier, while the TTM EPS loss narrowed significantly to -46 cents from -$2.55, reflecting an 81.96% improvement. The company's gross profit margin stands at an impressive 84.9%, though it remains unprofitable overall, with a net profit margin of -26.38%. Return on assets, ROA, is -1.51%, and return on equity, ROE, is -28.13%, because it's still not profitable as they are still in an early commercialization. Operationally, Delcath continues to manage its resources efficiently, as evidenced by a low debt-to-equity ratio of just 0.01. If we look at the financial performance over the past 5 years, Delcath Systems has operated at a loss during that period. However, the company's revenue began growing rapidly in 2024 due to the commercialization of its flagship product, Delcath. Net losses have started to decline, and the company is projected to become profitable in 2026. Delcath Systems 2025 financial forecast. Looking ahead, analysts are optimistic, forecasting 2025 revenue to reach $94.47 million, representing a 153.91% increase over 2024's $37.21 million. EPS is also expected to improve further, narrowing the annual loss to just 3 cents compared to a 93 cents loss in 2024, a decrease of loss by 96.77%. Analysts are giving strong buy rating with price target of $23.25, suggesting potential upside of 44.86%. DCTH stock price performance and valuation. Delcath Systems stock has delivered impressive gains, reflecting growing investor confidence in the company's future. At the time this video is created, the stock is trading at $16.05 per share, marking a remarkable 123.2% increase over the past year, substantially outperforming the S&P 500's 11.4% rise during the same period. Over the past 5 years, DCTH stock has risen 118.3%, outperforming the S&P 500, which increased by 106.2% over the same period. In terms of valuation metrics, Delcath Systems has an attractive valuation. Delcath's price-to-sales PS ratio on a trailing 12 months TTM basis stands at 8.89, while the forward PS ratio is projected to improve to 5.48. The company currently does not have a forward price-to-earnings PE ratio due to forecasted negative earnings. Although the projected forward PE is still negative for this year, the low forward PS of 5.48 and high gross profit margin of 84.9% make the current valuation very attractive for this fast-growing healthcare company. Delcath's systems growth potential. Delcath's growth prospects are bolstered by several factors. 1. Strong product revenue growth. The substantial revenue growth can be attributed primarily to increasing sales of HEPZATO KIT and CHEMOSAT, Delcath's flagship products for treating primary and metastatic liver cancers. In Q1 2025, Delcath Systems reported robust sales growth, with the HEPZATO KIT generating $18 million in U.S. revenue, driven by strong adoption for the treatment of metastatic uveal melanoma, MUM. While CHEMOSAT sales in Europe reached $1.8 million, an increase from $1.1 million in Q1 2024, reflecting sustained demand across key markets. The company's interventional oncology focus, particularly on the treatment of metastatic uveal melanoma, has positioned it in a specialized market segment with significant growth opportunities. 2. Treatment center expansion. A key driver of future growth is the expansion of treatment centers. Delcath currently operates 19 active centers, with plans to activate 30 by the end of 2025, as highlighted in the earnings call. This expansion is critical for increasing the adoption of HEPZATO KIT and CHEMOSAT, their drug and device combination products designed for liver-directed chemotherapy. The company activated 3 new U.S. centers in Q1 and planned for 2 more in Q2, with 10 additional centers accepting referrals, indicating a robust pipeline for further activation. This strategy is expected to enhance market penetration, particularly in the U.S., where HEPZATO KIT sales have been a significant revenue driver. 3. Pipeline development. Delcath's focus on clinical trials for new indications underscores its growth potential. The company received FDA clearance in December 2024 for a Phase 2 trial in liver-dominant metastatic colorectal cancer, and in April 2025 for metastatic breast cancer, with enrollment planned to start by the end of 2025. These trials will enroll approximately 90 patients each across over 20 sites in the U.S. and Europe, with primary endpoints of hepatic progression-free survival, PFS. Anticipated data readouts include PFS for colorectal cancer by late 2027 or early 2028, and for breast cancer by late 2028 or early 2029, with overall survival data following in subsequent years. The addressable markets for these indications are significant, with approximately 7,000 patients annually in the U.S. for each, compared to the current focus on metastatic uveal melanoma, which has about 1,000 patients annually. This expansion into larger markets could substantially increase revenue potential, as noted by CEO Gerard Michel, who emphasized the potential impact of a 4-month increase in PFS as phenomenal. Risks to consider. While Delcath's outlook is promising, investors should be aware of potential risks. 1. Product concentration risk. Delcath's business model appears heavily dependent on its proprietary HEPZATO KIT and CHEMOSAT products, which are designed specifically for delivering high-dose chemotherapy to the liver while minimizing systemic exposure. This concentration in a specialized therapeutic area creates vulnerability should competitors introduce superior alternatives or if unexpected safety concerns emerge with these specific products. Diversification limitations could expose the company to significant revenue fluctuations if market conditions change for their core product offerings. 2. Clinical trial outcomes. The company recently received FDA clearance for a Phase 2 clinical trial of HEPZATO in liver-dominant metastatic breast cancer, representing an important potential expansion of its therapeutic applications. However, clinical trial outcomes remain inherently uncertain, and negative or underwhelming results could significantly impact both near-term market perception and long-term growth prospects. Clinical development timelines may also extend longer than anticipated, potentially affecting revenue projections. 3. Ongoing regulatory scrutiny. As an interventional oncology company working with specialized drug delivery systems for cancer treatment, Delcath faces continuous regulatory oversight. Any modifications to existing products, manufacturing processes, or expanded indications will require additional regulatory reviews. Post-marketing surveillance may also identify safety signals not detected in clinical trials, potentially leading to label restrictions or other regulatory interventions that could impact adoption rates and revenue potential. Conclusion: Delcath Systems has demonstrated exceptional growth, driven by its innovative Hepzato kit and strategic expansion efforts. The company's impressive Q1 2025 financial performance, coupled with favorable analyst forecasts and a robust pipeline, underscores its potential as a compelling investment opportunity. While risks exist, Delcath's strong fundamentals and growth trajectory make it a stock worth considering for investors seeking exposure to the oncology sector. But remember, this is not a financial advice. What do you think about Delcath Systems? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.